Tesla is up 145% this year alone, but it's down 3.32%, $9.11, never forget, today alone. Now, it's been all over the board. We had a low back in January 6th of this year of 101. That was 52-week low. All-time high, November 4th, 2021. A little under 2 years ago of $414. Now, this is a company that in the last 2 years have seen sales go from $41.86 billion to $94 billion. And yet the stock is down. Why? Overvaluation? Maybe. Now, in this video, guys, I'm going to go over Tesla. Tesla stock, we're going to go over some high-level metrics. We're going to go over some news articles. We're going to go over some bull and bear cases from our community members. We're asking our community members to give their bull and bear cases so we can see what they're saying and share it with you guys. We're going to go over some analyst estimates. And of course, two major parts of our software, the 8 pillars and the stock analyzer tool. And the stock analyzer tool will be the one we use to make assumptions about the future and tell us what price to pay based on those assumptions. Now, whether you're a beginner investor or a very more advanced investor, I always say this. There is something for you in this video, no matter where you are in the spectrum. And as you stay in this video, the information becomes more and more important and much more valuable. So stick with me the entire time. We're going to go over these things, analyst estimates. So let's check out Tesla right now. So Tesla is still a car company. Okay? It's a car company. $850 billion market cap. One thing I always talk about, price to sales ratio of 9. That means for every dollar of revenue they have, you got to pay $9 for it. The average car company is 0.5 to 1. Now, of course, a lot of people out there are saying, Paul, it's not a car company. Guys, I believe last time I checked, 87% of its revenue came from cars. But one of the big pieces of news that they recently used to upgrade Tesla over at Morgan Stanley or someplace was their supercomputer. Okay, great. They very well could become a software business. But until then, looks like a duck, quacks like a duck, walks like a duck, must be a duck. Guys, its revenue comes from cars. They just sold their 5 millionth car. It's cars. Tell me how much of this $94 billion is revenue. It's cars. It's a car company. Even if they make software for their cars, unless you show me how they're selling that software to other users out there as an extra with high gross margins, and that software is overtaking their car revenue, it's a car company. That's it. At the end of the day, it's a car company. So, it's currently selling for 70 times earnings and 180 times its last 5 years' earnings. Its price to free cash flow is even worse, 138 times last year's free cash flow and 240 times its 5-year average free cash flow. All right. 5-year return on invested capital, 8.7%. Typically, car companies are very low. This means this is the return they get for the money they invest in the business. So the goal would be if they can add more money to that, invest more money in the business, they can really boost up their profit. Here's one positive. The last year was 13.9%. But guys, look at this gross profit margin, 21.5%. Do you know what software companies have? 50 to 80% gross margin. Does this look like a software company to you? Guys, stop telling yourself something just to make you feel better. It's not a software company. It is a car company. These are good margins for car companies, but it's a car company. And last quarter saw a drop in this gross margin to 18.4%. So let's go take a look at some of the comments in our community for Tesla. So I'm going to go pull up the Tesla chat. Boom. Oh boy, there's a lot. Oh boy, there's a lot. Bear, it's a car company and still overvalued, but who cares? Stocks only go up, bro. Thank you, Dan, for saying that. Did I like that one? I gotta like that comment. All right, buying volume was quite high the last couple of days. Yeah, it's been surging. Bull. Everything Money has done 69 videos on it. Bear. It's Jeremy, Paul's best friend's biggest position. Jeremy from Financial Education. That's funny. All right. Bull case, Elon, bear case, everything else. Okay, guys, let's go find some real ones. So Roger wrote, when to look at their latest 10K, the 4 latest filings was selling shares, 3 of them in September, I'm out. So he's saying they're issuing more shares. He doesn't like dilution. I don't blame you, Roger. To me, that's the company saying, geez, we were really overpriced. Let's just keep giving shares out to people. We can get cash that way instead of taking on debt. Wicked Willie, our in-house analyst. Bull cases, Tesla Model Y and 3 were the 2 best-selling EVs in the world year to date. Awesome. Oh yeah, this is the one. Morgan Stanley estimates the new Dojo supercomputer could add as much as $600 billion to Tesla market cap. Sick. And EV growth expected to grow at a CAGR 21.7% through 2030. That's going to very much help Tesla. Tesla is the leader in EVs, but don't get me wrong. Other companies are still making EVs. I have an EV that's not Tesla, and I love it. Is Tesla the market leader? Yes, absolutely. And I think that's going to be the case for a while. But at what price is that reasonable? Okay, some bear cases. BYD holds 5 of the 10 best-selling EVs year-to-date and was number 1 in year-to-date registered vehicles. And price wars are forcing Tesla to make significant price cuts over the last 100% correct. A car you could have bought, that you had to buy for $105,000 last year is now $75,000. That's not small, guys. That's a big bear case. Okay, let's see. What else we got? Yep, Frank the Tank, you're 100% right. Tesla superchargers seem to be the standard for public charging. He's 100% correct. How does that lead to more money? We'll see, but that is true. Petro. Oh, bull case. American Auto is on strike. That's going to help Tesla. The longer and longer that UAW strike goes, more and more it's going to hurt the regular auto industry and probably help Tesla. I agree with them 100%. Tesla Energy has a lot of room to grow. That could very well be true. There's solar panels, etc. Cybertruck production is very close. Okay. Tesla insurance and robo-taxis will be cash cows. Okay, potentially. I think robo-taxis is a big part of Kathy Wood's theory on Tesla. All right. Let's see what else we got. Yeah, they're going to have self-driving at the end of the year, right? Roger makes that joke because I think Elon's been saying that for quite a few years. Let's see what else we got. So Dan says, they've been promising stuff for the past 3 years, and to me, it's just blah, blah. Okay, very, very fair enough. Let's see what else we got here. Oh, wow, big stuff. My God, value investing fanatic, huge market share in car and EV, a large moat. I don't know if it's a large, I think it could be a large moat, value investing fanatic. I don't think it's necessarily a large moat yet. It could be a decent moat. The car industry in general is very hard to have a moat in. I'd argue Ferrari is one of the few car industries with a moat. Attractive car for the buy for the general public. You're 100% correct. Long runway for sustainability. Good stuff. Bear case. They have to sell more cars than is sold each year by all car companies combined to justify the current valuation. Listen to that right there, because I think he's spot on. To justify today's valuation, and we'll get into that shortly, they have to sell more cars than all other car companies combined. I don't know if that's exactly true, but they basically have to be the number 1 car manufacturer to do it. I don't know if it's all car companies combined, but that's a big number. They prefer financing from shareholders rather than debt. That means issuing shares. Yeah, so value investing fanatic, I'm just giving it to you. These are great comments. I'm going to give you a shirt. If we can put the shirts up for the video, somebody put the shirts up. Email us, value investing fanatic. Tag me or tag somebody, Nick, in the chat, or email help@everythingmoney and put the request in for what shirt you want. So thanks very much. So guys, great comments. Still more to go. Oh, this is funny. Nassim, I only got on Twitter to follow you, but Twitter keeps asking me to follow Elon. Here's what I did with that. And he blocked Elon. That's funny. That's really funny. Oh my gosh. All right. So that's a lot of stuff from our community members on Tesla bull and bear cases. So I like that a lot. Let's see what the 8 pillars look like. Oh boy. 4 checks, 4 X's. This one bothers me immensely. This bothers me. This does not bother me. This bothers me. Love this, love this, love this, love this. So really, there are 3 things that bother me here. Issuing a lot of shares and valuation. Remember, guys, you can have a great something, but it doesn't mean you should pay whatever price for it. That's what's happening with a lot of companies lately. But the market's been going up and up and up, so people feel like, oh, it works. But eventually, it doesn't work anymore. Tesla hit an all-time high of 414. I'm going to go on a limb. I've said this in other videos. I think we're going to wake up 10 years from now, and it would not have surpassed that 414. I think it'll be lower than that 414 price. I don't know where it's going to end up, but I've seen that happen so many times in history when super hype companies take decades sometimes to rebound. Even Microsoft, a company that's at amazing highs. It took 15 years before it hit an all-time high after its 2000, 2001 high. 15 years. 15 years. That could be the case here with Tesla. So, what are analysts saying about Tesla? Well, let's see. Expected to make $3.49 a share this year, going to $7.66, so over doubling in the next 4 years. That's big growth, guys. That's awesome. Revenue of $101 billion expected this year, going to $230 in the next 4 years. Huge. Major growth potential. But these guys are biased. The market's hyped about Tesla, so they got to have the hype with it. Look at this. The lowest estimate for revenue growth is 151 in 4 years. That would be 50% higher than today. Not as big a growth. But the highest estimate's 382. Jesus. Guys, it's all over the board. So, takes us to our last question. What price to pay for the company? That's why we have Stock Analyzer tool. But before I get into that, guys, really exciting news. So you're the type of person watching this video. And if you watch other videos of ours, it shows you clearly have an interest in investing in finance. This is exactly why we built this community and the software attached to it, was for people like you. One of our most active users in our community, of thousands of users, wrote me an email and said that he thought we were missing out on a lot of great community members like him. He bought the software only after we did the $7 for 7 days intro. He said, listen, I wasn't going to pay 30 or 40 bucks a month unless I really found the value in it. Once he tried the $7 for 7 days, he goes, I was hooked and I knew that 30 or 40 bucks was a steal. But he went one step further. He said to me, Paul, give it away for free, full access, 7 days. I think it'll get a lot more users who are going to realize the value of it. And I was like, okay, not bad. We're growing fine. But of course, I want to see more growth here and I want to see bigger growth in the community. So that's what we're doing now, guys. 7 days, fully free. All the tools here, everything. In fact, guys, I'm so serious about fully free. We programmed it where you can't even give us money until your free trial is up in order to buy the software. I want you to try it out for free. I want to make sure it's right for you. Sign up. All you have to do is give an email. You don't have to give a credit card number, nothing. You don't give any of that until the very end of the free trial. Get in, get engaged, use the software, talk in the community. I guarantee you'll have immense value for it. And my guarantee is, if you don't like it, fine by me. But go for it. I think you'll absolutely love it. It'll change the way you look at investing just like it did this guy. So again, no credit card, 7 days for free. So let's pull up my history on Tesla and see what I did it back on August 21st, so about a month ago. Here are my assumptions. I did a 10-year analysis, and my revenue growth assumptions to start were 12, 18, and 24%. So just to take it a step further, let's see what that takes the revenue. So at 12% a year for 10 years and $100 million in revenue today, it takes it to $310 billion in revenue in 10 years. Okay, seems reasonable. Now, 24% for 10 years takes it to $860 billion in revenue in 10 years. A lot higher. Let's say $860 billion. I'm going to go do this. Divided by, and let's say in 10 years, they're selling 15 million cars, which is a lot of cars. A lot of new cars. That's $57,000 per car. And you've seen their price decrease. And remember, to get 15 million cars, let's put it this way. Let's look at a company like largest car manufacturer by units. Toyota sold 10.5 million units back in 2022. 10.5 million units. What was their revenue on those 10.5 million units? So we'll go to their income statement. We'll go to annual 2022, 212 billion. So 212 billion. And I'll explain this when I'm done. The average price was $20,238. If I take their revenue divided by the number of units. $20,238 to sell 10.5. Now it's 10 years from now. Let's say this grows by 4% a year. 1.04 to the power of 10 times 20,400, 30,196. So for Tesla to get 900 billion in revenue on 15 million car units, that's an average of 57,000. You might say to me, well, Paul, there's other revenue. You're right. But Toyota currently does $20,000 a unit. It would grow to 30,000 with 3.5%, 4% increase per year in the cost of a car. it's going to be, my whole point about saying this, it's going to be tough. That's all I'm trying to say from this. Doesn't mean it's not going to happen, but you've got to keep that in perspective when you make your assumptions about the future for these companies. Is it even realistic? But I'm okay with that. I'll put it as my high number. Now, profit margin. Profit margin is getting better. 6.4% of the last 10 years, 9.3% in the last 5, 13% last year. But it's a car company. I did 5, 8, and 12%. Now, I'm going to go a little bit different. I'm going to call it 5, 10, and 15%. Free cash flow, I'm going to do the exact same thing. Now, you might say, well, Paul, they did 30. Okay, great. But guys, it's still a car company. And making 15% of the car company is very, very difficult. As an example, let me pull up Toyota. Toyota's bottom line profit margin is 7.7. Honda, 4.9. Volkswagen. Actually, let's just go Ford Motor Company, 2.5. Ferrari, they've got the highest profit margin at about 19.5%. So this would take Tesla to almost the level of Ferrari on the high end. Keep that in mind. Now for PE, what's not the PE today? What's the PE it'll sell for in 10 years? Now, if you're like meet Kevin, who is, I don't know how to put this politely, a moron, and he thinks that just because something was at a 200 PE, making it 70 makes it a discount. No, start at 15. That's the market average. Go up for moat, ROIC, and growth potential, and go down for the opposite. But it's at the end of 10 years, after they've already grown a ton more. So if the next 10 years you say are going to be gangbuster growth, apart from being a high moat, your growth is already done. They've become the number one car manufacturer in the world based on these numbers. Essentially, right? Not these numbers, but these two? Yeah, okay. So where is it now? Where's it going to be then? I put 18, 21, and 24, which is still a premium for a car company. All right? Now for desired annual return, you can get 9 or 10% from investing in a low-cost ETF and following the market over long periods of time. So what return do you want to buy an individual company? The more risk and the higher you make your assumptions, you need a higher desired return. So I put 11, 14, and 17. I actually want to increase it just a little bit. 12, 14 and a half, and 17. Because guys, 18% revenue growth, that's going to be hard. Yeah, you're going to look at this and say, well, Paul, they did 50. Yeah, but they were a lot smaller. Could this still happen? Absolutely. But remember, investing is about making decisions. It's basically betting. And where's the betting in your favor? If the market was pricing Tesla like it wasn't going to grow at all, I'd be all in favor of probably buying. I'd be like, oh my God, the market's pricing this like it's not going to grow for 10 years. Absolutely, it's going to grow. Remember, a good thing can be a bad investment at the wrong price. That's the difference between investors and speculators. Investors know that there's a price that's too high to pay. Speculators just hear the story. And as our friend Professor Oswald says, a story without numbers is just a fairy tale. So combine the story and the numbers. The story on Tesla is phenomenal. The question is, can the numbers justify it? So guys, remember, I'm going to hit the analyze button. Just stay with me 1 or 2 minutes longer, but you get access to all of this with our trial. The link below, everythingmoney.com/sign up, 7 days for free, full access. I hit the analyze button. The stock is currently at 265. I have a low price, ready for this one, of 37, a high price of 223, and a middle price of 105. Guys, even the highest of assumptions, it's still not justified. And that assumes, all this assumes, they don't issue any more shares. If they issue more shares, you're being diluted even further. This price is going to go down and down and down. So guys, I'm waiting on Tesla. I don't know where I'm going to wait for it, but probably till it falls to really stupid low levels where I can make an assessment because it's still the car business and it's still difficult. Thank you very much for your time, guys. I'll see you in the community when you say hi. Take care.